Hey everybody, I know it's a bit late, but just doing a market update, at least a mini one for Bitcoin. I'm running through stuff real quick. So on the long short ratios, we are still back now at majority short. This is what we were seeing yesterday. We saw a bit of a comeback on the longs as we started to break back down locally. We're potentially swing failing, I'll go through it, but we haven't really broke anything yet that's too drastic. On the funding rate side, funding rates are wildly negative. I mean, this is just so crazy to me. I mean, everyone is wildly negative. Vertex, yeah, the fact is that they're influencing a continuation push right up at the moment, which is pretty cool to see. So there's some good liquidity and liquidations above us, which we'll go through. On the liquidation side, yeah, there is some really juicy stuff higher. Since we've been breaking down, there's quite a bit of heavy shorting as we saw on the long short ratios, going all the way up to 90K, 90.1 before it starts to thin out a little bit. But in general, yeah, it looks still relatively attractive. There's some stuff building below us, and I would say that if we do start to break below 86.5, 86.3 here at the low, then we should start seeing some moves back towards 84. I think 84.5 can still act as a magnet, especially given that options expiry is occurring at 08 UTC on Friday. So quarterly options, especially. A new thing on CoinGlass, which I thought was interesting, was the Hyperliquid liquidation chart. It's being very heavily used. Hyperliquid, should definitely check it out. Big things here are, yeah, there's some big stuff just above us at 88.8. The next big block's at 90.3. So there's quite a bit of correlation to what we saw on the liquidation side from Bitcoin. Massive, massive short liquidations would really start occurring if you get back into the high 90s, but we're a long shot away from there. Locally. So we are closer to that local little long, the local short liquidations right above us. But there's still some decent stuff right, down towards where we potentially want to go, down towards 84. So we're kind of stuck in the middle of it. But I think overall, as we form out some potential bottoming structure, again, it's very early to be thinking about that. This is starting to look incredibly attractive in case we ever do start breaking back above 90K. I think we just actually push it much harder than people think, because there's enough short liquidations that could easily take us to new all-time highs. Comparatively, there's a lot less on the cumulative to the downside to take us like way, way, way lower towards 65K, which I think would be at any point like a major capitulation bottom. But for the time being, we're kind of stuck in the middle here, not expecting a whole lot, but we are closer to the short stuff. One other thing as well, which I thought was cool, there's a new product, they have it on beta testing now, called Kayotaka.ai. I'll post a link in the chat, but just check it out. It's pretty nice. They actually have the aggregate order books built in, so I really like this fact, and the fact that the heat map is really clean. So in general, I relatively like it quite a bit. It's nice, it's clean, it's aggregating stuff really fast. It's super fast load time, so definitely check it out. And on the liquidity side, or where we have resting limit orders, effectively, there's still a decent block here, 86.8. I would say if we start to pull this and start to lose it, then we should start seeing some moves back down towards either the lows at 86.3. And losing that, we should come back towards 85, where we have quite a bit of heavy resting orders there. But those are still in place for the time being. So there is some like pressure to push up higher until that goes away. So looking at the chart, again, trying to keep it brief. So from yesterday, we talked about this little failure. It's like, this is what we talked about yesterday. If we get the failure here, we're going to start seeing some break back down to retest stuff. We did. It was actually a very bullish back test. Didn't even get all the way to the weekly open, but we did test some of the wick structure. These lows tested, previous levels that run tested as well. So we've broken back up. We've tested the highs now entirely. The thing is, I will say that we are seeing some lower time frame divergences. So if we do start breaking here, we should start seeing some moves back lower. That being said, you're at resistance on a couple different metrics. So yeah, we're farming out some structure. I think the party is really going to start Thursday, Friday as far as volatility. That's still my expectation. Priority is still technically up in the localized move. If we do start losing the lows here at 86.3, I think we break weekly open and just start flushing it back towards 85 and the CME gap. So the big thing here is we have a big CME gap down at 84. We also have a max pain scenario in quarterly options, which does expire at 08 UTC on Friday. Max pain basically meaning that the majority of puts and calls would be OTM out of the money. And yeah, we could see some larger entities potentially push price that direction. But for the time being, going into Wednesday, it looks relatively good still. A lot of people are trying to short this move. That's why there's liquidations building above it. Watch the structure. If we come back down and just start squeezing out this type of structure and don't actually break the lows to go lower, this structure right here, this kind of like flat top triangle stuff, this is what you prepare for when you have a big short squeeze. And the reason for that is because it allows all of the liquidations to stack in one spot. So keep an eye on it. It's a pretty interesting change in the kind of price action we've been seeing. In general, the local stuff looks relatively okay for some continuation. We're still kind of like in this overall column to go higher. Really breaking stuff and losing levels would have to be a loss of 84 and getting back below this low. And we could still hold, 81, 82K, and it wouldn't be the end of the world. We can't lose that. If we lose that, the trend is over. We're going to start breaking down, and we probably leg down to potentially new lows. But until that happens, it's pretty interesting structure across the board. The short squeeze play is actually looking like it might play out. Negative funding rates, good liquidations above us, and retail starting to short. So yes, go ahead, try to fight the upside trend all you want. I'm waiting for a bigger break, but until then, you're at resistance locally, and that's pretty much all you can do, and some bearish divergence. So if you're trying to scalp it, sure, but the general trend is still locally up. The higher time frame trend is still down. Nothing has changed there really, and I would say that until we really see significant regains back above the 90K range, yeah, you're still in this kind of lower range with significantly low volume areas below you, and yeah, we're not out of the woods, but it looks relatively good across the board. So that's that. Take it easy. Catch you tomorrow.